Hello and welcome to Trader Talks in today's market. My name is James Boyd. With me is Jeffrey Abalos, and we will get to him just shortly. But we welcome all of you here today. We got Silas, Sharon, K. Brown. I got Paul Montgomery in Rochester, warm New York. Little fun there, Paul. I lived in Ithaca. I know what you're going through. You're a tough person. It doesn't last forever, but it feels like it. And we got George and many others. Welcome to all. Just real quick, as we hop right in, remember that we just had the bell, so we'll get to that just momentarily, and we'll also invite Jeffrey to come on board as well. Also, as we get started, remember you can find educational content and examples, not recommendations, on my X page, James Boyd CS, just capital J, capital B, CS. And also, as we get started, remember that with what Jeffrey and I discuss, the information here is provided for general informational purposes only. Also, we're going to use specific securities to demonstrate analysis and trading functionality. I know Jeffrey wanted to kind of bring up some discussion on volume here today, which we will. Also, remember that if we bring up options, remember options carry a high level of risk, not suitable for all investors. And also remember, when we talk about examples, they are just that, and investing involves risk. Now, also, as we get going, we'll talk about kind of some of the general things we're seeing in the market this morning. We'll kind of go from futures first. We'll look at volatility. We'll look at maybe what crude's doing. By the way, if you want to include gas with that, we'll look at that as well. Also, we'll talk about some of the precious metals, the US dollar, then get into the indexes, and then talk about maybe sectors and stocks. And we'll talk about those on different time frames as well. So let's go ahead and just hop right in. Jeffrey, how you doing this morning?
I'm doing great here in beautiful Arizona. It's a little chilly out, although probably not as cold as in New York. We're at 33 degrees this morning. So I'm doing well. How are you, James?
I'm doing great. So Jeffrey he attended the San Diego event with Kevin Horner. Kevin Horner is off today. I'll be taking his stead, but I'm just filling in for today. But I've worked with Jeffrey Abalos in the past. I'm looking forward to actually talking to him about the markets here this morning. So first off, Jeffrey, let's go ahead and just kind of touch upon some of the things we're just seeing in the futures market, okay? So number one, probably hard not to see, is you did see crude oil overnight. And Jeffrey, this is kind of unusual, maybe a little bit. We saw crude oil break above 71.5. That was about 2 weeks ago. And there's been a nice move to the upside. Overnight trading, 78.5. Jeffrey, any thoughts on maybe what's kind of causing the crude oil to go up like it is?
That's a really good question. And to be honest, James, I'm not one to follow the crude oil markets, but as a market technician, one of the things that's captivating my attention right now is that point that you're highlighting, which is about 78.57, really nicely done. So what could that possibly be? That could possibly be a short-term resistance level. I would be a little bit surprised, and I think a lot of traders would be surprised to see us just continue past that without giving a little bit of a pause, especially with the 80 price just above that. So for those of you crude oil traders out there, you may expect a little bit of consolidation here, either today, tomorrow, or sometime this week, somewhere just shy of that $80 target. So that's what's captivating my attention right now, James. Also seeing just before this, some nice green bullish volume as we were coming out of that dip. So we started to move it to the upside, pulled ourselves above that 20-period simple moving average on the volume. That's that nice line in yellow right there. So that gives a little bit more credibility or confirmation, as a lot of us technicians would say, to the upward movement that we're seeing in oil, James.
Yeah. One thing I'd be interested in seeing, since the market is open, does this crude price, is it helping the energy space? Here we actually have crude oil that's been going up. We have the S&P markets that have been dropping down. We talked about on Friday how crude oil, and there's a product that tries to track what crude oil does, and then there's crude oil and actually the energy sector. Just briefly, let's go to the market watch just real quick. Let's go to quotes, visualize. And what I want to find here just for a moment is it just crude oil, the price itself going up, or is it translating to, let's say, the S&P 500, the energy sector? Well, if we answer that question, where's the energy sector? The energy sector is right here. And what you're now going to notice is, if we said, is it really helping the energy sector? There is some green there, okay? Some green, Chevron, EOG, Fang, Devon, Hess, and so on, you're going to see there's more red in other areas. So it's helping a little bit. And I think that's important to know, because if you're a stock investor and you're saying, I'm playing crude oil, the correlation of the energy sector to, let's say, crude oil, it's helping a little bit. I'm also going to say kind of keep an eye on ConocoPhillips. We talked about that last week. Could that snap back up inside that old channel? Keep an eye on that as well. Overnight, we also did see the U.S. dollar crank or ratchet its way higher. Jeffrey, you talked about how you're a technician. Tell us what you're seeing on this chart.
Gosh, really tough to give an argument to anything bearish at this point, isn't it,
Don't
James?
fight it, Jeffrey. Don't fight
Yeah,
it.
right. The trend is your friend until it bends, and that's when it ends. And right now, this trend does not seem to be bending at all. You notice we're continuing to hit some of the fundamentals of technicians, higher highs and higher lows, thus confirming this bullish movement right here. And you notice every time we've consolidated, that's been an opportunity to take a little bit of profit, but also potentially get into a new position. And now we're up, what, 1, 2, 3, 4 days in a row here on the US dollar? Not doing too bad. I would imagine with what's happened with the overall market and the outlook for the United States, that's probably going to continue unless something happens. So it's one of those ideas of, if it's not broken, then you don't need to fix it type of trade. So in this case, I would imagine a lot of traders out there are probably going to look for this to continue throughout the next couple of weeks. James, what are some of the things, though, that are capturing your attention?
Well, one of the things that's capturing my attention is I look at currencies, Swiss franc, euro, pound, Canadian dollar, and so on, Australian dollar. The big thing is just general international weakness. Okay, so sometimes you can just get international markets and or economies just weak, and those international markets come to, let's say, the United States of America. They translate those dollars or convert their currency into US dollars, put that money to work in our markets. And I think that's really what we've been having and still have currently. So that's going to be something we continue to really watch. Now, Jeffrey, kind of more on, let's say, the stock front, okay? VIX, okay? Now, this kind of goes back to what we talked about last week, okay? Which is whenever we see, let's say, the green lines on the moving averages, I'm using a whole 10-day moving average and a 20-period moving average. We had got that green shading, okay? We're going to see that we had a crossover this January 6th at the earliest, confirmed on the 7th, right? And so when that volatility starts to go up, Jeffrey, what is that kind of telling you? If volatility is starting to go up, what does that probably mean in terms of market posture and market breadth?
That's a really good question, James. Well, it's important, I think, for the audience to keep in mind what the VIX is. The VIX is a weighting of S&P 500 options. And because of the fear factor, the puts tend to get a little bit more weighting than the calls. So what's happening when the VIX is going up? So that means the puts are getting a little bit more attention, generally speaking, on the S&P 500. So why would people be getting more involved in puts? It's because there's a little bit of fear out there, ladies and gentlemen. People are getting a little bit worried, as you'll probably see here in a moment on this market pullback. That's a potential time, and I've been talking to a lot of clients throughout the Southern California and Arizona regions about hedging their portfolio. So we've got a big jump today in the VIX. I mean, look at how high that thing went up. We're up about $1 or so right now. That's letting you know that there is some trepidation creeping into the market. Now, how much higher could the VIX possibly go? I'm sure you're wondering. I think as a market technician, you've got to wear your resistance hat and say, well, where does resistance happen? And you notice back in November, we got all the way up to 23, bumped our head a little bit for a few days and came back down. Then we tried it again as we go into mid-December, bumped our head not just at the 23, but at the 24, and then even the 28 level. Great. Thank you very much, by the way, for pulling back on that. Go back to September, bumping our head at 23. Go back to August, early September, bumping our head at that 23 level. So, James, I would imagine now that we're here, there may be a little bit of a reckoning. Hey, is this market going to continue pulling back, or has this pullback happened? People have started taking some profits. Maybe they're starting to look to buy more at these lower levels. Ultimately, time will decide that one. But what's on your mind, my friend?
Jeffrey, I love how you ended that, okay? So we know that if Jeffrey, you've been in the market a long time as well, but in the first 2 weeks of the year, you can always kind of get a little shaking out. Okay. In other words, some people might have been trying to hold some positions to the first of the year, et cetera, and then try to exit those positions after the first of the year. And you might you know, and I'm not going to bring it up. It's the T word, okay? But some people
Yeah.
try to hold the positions through the end of the start of the year, I should say, right? And so we've had about 2 weeks now where the market has been able to sell. People held those positions into 2025. They've held them, and now we've been seeing some selling after a very strong last 2 years. Well, this kind of goes back into your point, right? Was that selling doesn't last forever. And usually these VIX points, okay, so these levels like 23, as you mentioned, Jeffrey, 3 times. We did get to 24 to 28 one time. You know, a lot of things we've been seeing, if we see the VIX going up like this means a lot of things have really come down to horizontal support. Now, Jeffrey, you use the word fear, and I know what you mean by that, okay? I think the other word, and I would agree with that. Some people are fearful. However, some other people kind of feel like it's opportunity. Okay, you actually need some investors to maybe capitulate or panic to get the prices down to kind of some of those support areas. Okay, so this is in a short term sense, it's a negative if you already have stocks or positions. But if you're trying to build positions, this is really what you want to see. Jeffrey, is that maybe on the same thought of what you're thinking?
Yep. For those people that had taken out some positions at the end of the year, maybe they were looking to get some gains, they had some losses from earlier. This is their opportunity potentially to start trickling into new positions. So this is not necessarily a bad thing. And remember, everybody, for a lot of markets, if you see it continue to run, we've been in this bull market for over 2 years now. If you see it continue to run, it's good to have a little bit of a correction. Think of running a marathon. Sometimes you got to get off to the side, grab yourself some water, catch your breath, and then continue going up. So I wouldn't say this is a crash, if you will. We obviously don't know what tomorrow and the day after that's going to hold. But I wouldn't say that people out there are saying, oh my gosh, there's blood in the streets, everybody run for the doors. I don't know that that's happening yet, James. Obviously, time will tell.
Yeah. Well, Lee, it's happening in currencies, but not in many stocks. Now, I'll talk about some areas that I do think have maybe been a little hard hit. Let's talk about just real quick the SPX. So, Jeffrey, these have been our lines. So, as Kevin and I have worked together, and these have been really the channel lines in which we had, okay, where the S&P was grinding to the upside. This 58.72 was the support level. We needed to hold above that. We didn't do it, okay? And what you're now going to kind of see is we're about halfway inside the old channel. So I think the biggest thing is when prices break down to a lower low, there can sometimes be an absence of buyers. Not because they don't want to buy, but just because they think the prices could go lower. So if we were to look at this and say, what do we think it's going to do? Well, probably think it's going to go lower. Lower to where? Well, the next test is probably down at 5,700. Now, 80 points on 5780, the index level, is about another 1.5% drop. So it's not huge, but if we fall down another 1.5%, we're coming right down to that horizontal support area. Now, I think if we're going to get the market bounce, we need to see wider breadth in sector participation. Now, Jeffrey, I want to pull up just real quick technology sector for just a second. Just take a good look at that. Does that look like it's in an area that it could bounce, Jeffrey? What would you say to that comment?
Potential. This is a really good call out, though, James. This is one of those zone identifications. So a lot of us are naturally going to see that 2250 level. That's where our brain's going to go. But remember that support and resistance aren't necessarily hard and fast numbers. Sometimes the psychology works out when you hit numbers like 100 or 500 or 1,000. But in other times, and most often, you'll find that it's a zone. I would imagine, and you kind of highlighted this with the pencil tool, that 2250 rather area is going to get a little bit of attention. Maybe we start to see some now, maybe we see some a little bit later. One of the things I'm curious of, though, James, is as we go back to the S&P 500, or we're looking at something, for the viewers out there, what is the volume telling you? Are we having increasing volume on a decreasing day? If that's the case, then yeah, we might want to position ourselves a little bit more bearish, at least in outlook. If we're seeing less volume on decreasing days, that's not lending to the confirmation of what's happening. And so what we may see happen is a lightening up of the downward movement. Ultimately, time will tell. But that was one of the things that we were talking about during the market event. And a lot of the audience members, I don't think, were giving enough weight to volume as a confirmation mechanism, James. So I just wanted to give that a little bit of attention here this morning.
Yeah, and when we look at individual stocks, we'll definitely pull that up more to show more examples of what you're referencing. So if we look at technology, again, if we're going to get a market bounce, it most likely is going to come through that sector, which we're not there yet. And if you look at discretionaries, that's another one. Now, if you look at the discretionaries, if we kind of said, where do we see support? Probably right around 2150. If we kind of said, what's the earliest area? Probably going to say right around, let's say 2200. Now, the other part of this is watching those two sectors, but watching what really kind of matters the most in terms of those sectors. So if we were watching, kind of looking to see if tech bounce, what is Apple doing? What is Microsoft doing? Okay. If I was watching, let's say, discretionaries, I'd be thinking like, what is Amazon doing and so on. Watch some of the big names. Are they getting a bounce yet? Speaking of like, are we getting a bounce yet? Or are we there yet? If you look at Apple, we've also come down. And Jeffrey, I want to kind of speak to what you just said, okay? Or kind of visually show an example. So here we actually have the moving averages where they've been red. And I want to repeat a question I had on X over the weekend. If we have red lines on the moving averages, we have never and won't ever discuss that that is an entry unless you're buying at a price level. Now, don't show that very much because we want to see at least a moving average go green, at least one, okay? At least the 10-period moving average. That would be the first one to go green. So when you look at these red moving average lines, they are still telling us, now I might not like the answer, but it's still telling us sellers are in control. But I want to buy, the investor says. And the red lines keep saying sellers are in control. And the investor says, but I'm getting impatient. Now, Jeffrey, have you ever had a situation where your technical analysis was saying sellers in control, but did you ever have something maybe inside that was saying, yeah, but I want to buy?
Yeah, James, have you been reading my trade journal again?
No, I haven't. I haven't been down to Arizona lately where I could pick it up.
Yeah, absolutely. And I think this is a really good call out, James. And thank you for bringing this up. The emotional pull. We are going to have times where we say, gosh, I've got this cash sitting on the side. I got to get it to good use. I got to start buying stuff, even though what I'm seeing on the chart tells me not to. Or maybe things are reversed. Maybe some of you are in a short sale position. And remember, short sale is a little bit more risky because it does involve the use of margin. But your short selling says, oh, look at how well this position has been doing as a short sale. Maybe I should get rid of it or close it out. But no, you know what? My chart and my process says to stay in it. We are going to have, excuse me, everybody, we're going to have those emotional pulls. Expect that. We are human beings. We are emotional creatures. That's okay. But James, my question to you is, if you have an emotional pull, does that mean you should throw out all the work you've done on your trade process?
No, so the process never says it has to be like, yes, it is an entry setup. The other part of the outcome might be, no, it's not a setup yet. Now, that doesn't mean that if I say, look, the answer is no, not yet, that does not mean the time that I took to actually come up with that conclusion was a complete waste. So in other words, I'd be looking at this and being thinking to myself, hey, we're kind of coming down to this area. I'm going to maybe even set a little slight, maybe an alert, maybe at the 227 change and say, could it even come down lower? Okay. So when I see things like this, like Apple, where it's like, it's not showing an entry yet, but it's in the zone of the support area, I just like to set an alert. Eventually, it's going to get a bounce. The question is, as I come down to these levels, can I set an alert and then follow through on actually seeing if the price can get below the alert level and start to see if there's a bounce? Now, Jeffrey, kind of to your point that you said earlier, which is you're looking for the volume to be above the average, correct?
Yeah, the volume above the average, and also you're looking for a crescendo, if you will. So you notice as we were going lower from, we'll call it just after December 27th, we're going lower. That volume is increasing. That's something else that market technicians and people that are trading on the charts are looking for, is increasing volume. Having one big spike like you notice on December 20th, that can be an anomaly. That can be an earnings announcement. That could be a one-off. But one of the things I'm looking for, James, is in addition to having a cross above the 20-period simple moving average on the volume, I also want to see those increasing days, which you do have here on Apple, lending to the bearish camp.
Yep. Yeah. So the you know when you're seeing markets fall, the number one goal is you're trying to protect capital. Two, you're trying to be patient and know what you're waiting for. So remember, we've been very clear that red lines are not entry setups unless you, okay, are a buyer at a price level. We've talked historically about the risk of that when you get in at a price level when there's not confirmation of a bounce, okay? So on Apple right now, we're kind of in that zone of potential support. No change yet on the shorter term moving average. Now, I want to kind of go back to just real quick when we look at kind of these other areas for just a second. So we talked about Apple, right? Another one, if we're talking about, let's say, discretionary, we might bring up something like Tesla. Now, remember, I kind of said that one of the first signs of any trend change, and this has been a question that happens quite a bit, which is how can you tell if there's starting to be some buyers? Well, what we look for is there's just the shorter term moving average to go from red to green. That is the first sign that will also probably have some bullish candles with it of showing any shorter term trend change. Second is going to be the moving average crossover, which is trying to do so far here today. The reason why I bring up Apple, the reason why I bring up Tesla, and we could bring up Meta, etc. If institutional investors are going to get in, they're most likely going to get in the most liquid names. Okay, that's the key, the most liquid names. And so it's very important to watch some of these big ones. You might not necessarily trade them, but you could kind of use them as a kind of almost like an index, if you will, for the sector. Jeffrey, any comment with that?
Yeah, I really like what you're saying. I got a question from one of our viewers out there, and I did want to pose it to you, James. The viewer was asking why use the 20-period simple moving average versus like a 30 or a 50. Could you maybe speak to which one you decide and in which circumstances?
Yeah. So the moving averages that we have, it's a whole moving average. It's a
Okay.
weighted moving average, which means it's weighted heavier to the more recent days, okay, versus a simple moving average, which is like an arithmetic moving average. Okay, it's an average. It does not weight what happens more recently more than what happened 30 days ago or 20 days ago. Okay, so we like a weighted moving average. Moving average, it could be a whole or an exponential, both. Okay,
Yeah.
either or. Now, the reason why somebody would use maybe like a 30-day SMA is really just to have a general direction of trend. General.
Okay.
Purpose of a 30-day SMA is not to really be super sensitive to price because you're just trying to get a general direction. So this right here, this is a 20-period moving average, and we've gone over this historically, how that moving average line, now that's a 20. We have also used a 30, and that is the HMA, the whole moving average, weighted, okay? Now,
Okay.
I'll send this chart out to you in just a sec. This line below, and by the way, either or is fine. If you said, James, I'm a little longer term, you might use the 30. If you said, James, I like shorter term to intermediate, then you might like the 20, okay? Now, this line right here, this is a 10 HMA, okay? And that's what we have right there. The purpose of that is to tell us momentum, okay? Now, I've looked at, historically, probably since 2004, 2005, I use more of a 10-day EMA, okay? 10-day EMA and a 30 SMA. Over time, some of the technical tools can change, and they came out with something even more sensitive than an EMA, which is a whole moving average. And so I kind of just went to that
Okay.
probably about 3-4 years ago or so. And so I just like kind of something that's more sensitive to price. That's the purpose. Okay.
That's it.
Good question.
Okay. And does that relate to what you're picking in the volume? So if you're using a 20 full moving average in your chart, are you then using a 20 for your volume?
Yeah. The reason why I have the 20-day average volume here, this is the 20-day average volume, okay? So the reason why I have that is because I'm trying to see the volume average over about the last month. And technically it's 21 days, okay? Yep. But if we just said, hey, give me about an average volume over the last 1 month of trading, there you go, okay? Gotcha. Let me share this chart with you for just a second, okay? I'll put that in the chat. Now, by the way, if someone said to me, well, James, is your 10-day exponential, 30-day simple a horrible chart? It's not. It's just the second chart that we would choose behind this chart. We just like it to be more sensitive. Now, again, if I said, hey, I want to go back, I'm a little bit more of a trend trader. We're going to move the ball here. If I said, hey, I don't want to be something where maybe 1 month might be too short for you, how do you change it, okay? So we're going to click on the little test tube, and we're going to go right here, and I'm going to go ahead and just click on that little gear right there. And if I click on this gear, so I clicked on the test tube, I went down to the whole moving average 20. I just went to the settings, which is kind of what you expect, okay? And I'm going to go length. And I'm just going to lengthen this out a little bit. Now, what is this going to do? Well, when you get buy or sell signals, it needs more confirmation of time or price, but really time, to get it, okay? It's not going to give you as many signals, okay? So I'm going to go push that to the 30. So if you said, I want to see kind of the differences between that, okay, you're now going to see there it is. And by the way, we can also go back and edit that shading as well to make it where this shading is really off the 10, 20 period moving average. How would you do that? Right click on that line, okay, right click. Yep, let's go back. Let's right click.
Could be tough to grab it, I know.
Let's do that. So if I wanted to also change that to the whole moving average, the shading, I'm going to go ahead and I believe it's right here. Actually go back. Yeah, there it is. So you'll see that the cloud, they call it a whole moving average cloud. It's based on the 1020. So if I want to kind of make that the shading consistent with a 1030 now, just to show it, because people are asking the question, that's fine. That's why we're here. 1030, and click on now apply. Now the shading, instead of the shading being lower than the 30 period moving average, it's now consistent with a 1030 setup. Now, if you said, James, that's the one I want, send it to me. Well, let me send this to you, and now there you go there. Okay. Cool. Now, let me go ahead. Let's kind of move forward on some different stocks here. Okay. So first off is if every time when the market drops, if you emotionally kind of get down, that's probably the greatest time when the market could bounce. Okay. Mm-hmm. Now, if you feel like when the market really, really, really drops, you just have to kind of think of it being about opportunistic. Okay. And so that is found over time. Jeffrey, I'm sure that you didn't start with what I just said, and I didn't either. Okay. Yeah. But when you kind of see the cycles of the market, you kind of learn that over time, don't you, Jeffrey?
You do, yeah. And a lot of us are going to go through that emotional roller coaster. It's important to not get off the roller coaster halfway through the ride, because that's when things tend to really hurt. So yeah, it's going to happen, James. You know it as well as I do. A lot of the viewers out there know this. It's part of the experience. Markets are going to go up. Markets are going to go down. Similar to waves in the ocean, the waves are going to continue. Sometimes if you have a really bad time on land, that can lead to a tsunami. You got to watch out for those. But ultimately, those waves will continue to ebb and flow, and the market's going to do the same thing, James.
Perfect. Now let's kind of talk about some. So first off, if we look at the Dow Jones, right, it's up 194, up about 0.5%. Broke support on Friday. This is not unusual to kind of get a little retest of where we broke down from. The one thing about bearish trends that you got to be very careful on is you can kind of fall in love with a green color candle. The green color candle is not really that special unless it's above the moving averages. Okay? So if you see a green color candle and you're below the moving averages and you are below support, be very careful in thinking that's bullish, because it's just really like going from a lower low and forming a potential lower high. Now, we got to speak to this just real quick in the last about 15, 18 minutes of this class. Number one, we have earnings coming up this week, okay? Now, by the way, this could be a positive, right? if investors have sold, and coming out this Wednesday, we have stocks like JP Morgan, Citi, BlackRock, Goldman Sachs. They're all coming out this week. Let's kind of look at the financial sector. Now, that financial sector, and by the way, we could also include interest rates, which went up to a brand new high recently. We saw the financial sector get pushed down. So let me repeat this. JP Morgan on Wednesday, Citi, Goldman Sachs, BlackRock. Getting into Thursday, we have Morgan Stanley. We also have Bank of America, and we also have United Healthcare. That is coming out Thursday. We do not have earnings on some of these other names like Netflix until the 21st of January. And then we will not get into, let's say, Tesla, Meta, and Apple, not until the 29th and 30th. So this week is going to be all about kind of the financial sector. So, okay, so keep an eye on that. And that sometimes can provide really a catalyst for some things to bounce as some people exit prior to the earnings, okay? So keep an eye on those financials. Now, what I want to do here is let's kind of talk about some of these sectors just real quick. When we look at the energy sector, we started talking about crude, and we've been really seeing crude go to the upside. Now, sometimes I know what you're thinking. When you look at this and you look at crude, when the investor is trying to go long, they're trying to be long or bullish when you get the green shading. The green shading actually happens when the 10 is above the 30 period moving average as we adjusted that. Now, when we saw the energy sector fall, 10 below the 30, red shading. And then you fast forward to the 27th, the energy sector, or about 2 weeks ago, started to go up. And it's kind of still grinding its way higher. Now, Jeffrey, I want to go back to one of the stocks that we saw in that area. And by the way, I want to ask in the chat, has anybody been watching the energy sector? Okay, now, if you've been watching the energy sector, is there any stocks in the energy sector that you've been watching? Now, one of the stocks that we've been watching kind of over about the last 2 weeks is a small company we've never heard of before called Chevron, okay? And Chevron kind of led to the upside more than ExxonMobil, and that's had a pretty nice bump here today. And what you're going to see is a gap to the upside, rallied up to 157. Now, when the market falls down, the stocks that are going up feel very, very narrow. That's true, okay? The majority of stocks are actually following the index, let's say the S&P 500. But and so if you're playing bullish stocks right now, it feels like what you are bullish feels very, very diminished, especially if you were exited out or stopped out. Now, one of the stocks I really want to bring up just real quick to kind of see if we're getting a push is ConocoPhillips. Now, we mentioned this on the market wrap on Friday. Now, Jeffrey, you're a technician, okay? And if you asked me and said, James, what are you? Are you a technician? What are you? And I'd say I'm a little bit of everything. Jeffrey, I'm going to lean on you since you're the technician.
Sure.
If I said to you kind of old support was where, what would you say?
Yeah. It's hard to make an argument for anything other than that 102 level. Like, you notice what, 1, 2, 3 different times since September and in through October, November, you hit right off that level. Yeah, you've got it, my friend. It's really hard to say it's something other than that. But yeah, go ahead. I'm intrigued where you're going with this.
No. So the reason why we bring this up is one of the setups that we talk about is whenever you get a stock, okay, that falls down below the moving average. I mean, this is just selling. Flat people getting out, right? Yeah. And then all of a sudden, someone or some institutions, plural even, they actually start going long, but they're going long below support. That is so counter to what we talk about because as investors, we're trying to buy above support. But sometimes you get institutions, maybe like Warren Buffett or others, that believe they have enough ammunition of capital that they're trying to build a position over time. So what that really means is they're not just buying 100 shares, 1,000 shares. They're trying to buy 1 million shares, 2 million, 3 million. And they're trying to build the position over time, okay? And they're trying to dollar cost average over time. So now, if we look at where this is today, as a follow through to what we talked about on Friday, all of a sudden we get a bullish engulfing candle, above the 102 level. Okay. Now,
Mhm.
Jeffrey, if we kind of set any levels of resistance above us, what would we say here?
Yeah, so now that we've turned our old support into potentially our new floor, looking at this chart, it gets kind of messy now, James, as you're looking what price action showed up previously, very messy until you get to about 115. So what would somebody anticipate happening? Well, if it was a messy price chart as we were going from 115 and around the 102 level, I would imagine that there's a lot of market technicians out there that are saying, probably more of the same. Maybe we continue the bullish ascent until we get to 115, but we're probably going to get some points where we bonk our head a couple times and pull back and then keep going. So this one's really tough to say anything definitive until you get to about 115, James. What are your thoughts on that?
Well, so if we break, the whole idea is if that's resistance or what should have been resistance, right? And then we get up inside, we're just going to call this a sideways channel. We kind of call it the path of least resistance, is that it might try to go up to the top of the channel. Now, the reason why we looked at crude oil first, and then second, the reason why we looked at the energy sector on the S&P 500 is we kind of wondered if the movement in crude oil, and by the way, we can include nat gas, is it helping some of these stocks? And we see actually ConocoPhillips getting a little bit of a push here. Now, we're going to do a trade on this, okay? This is a demonstration, okay, not a recommendation. I'm going to go ahead and right-click on this chart. I'm going to go buy custom, and I'm going to put with OCO bracket. Now, Jeffrey said the 115 area. Now, Jeffrey also talked about, when we talk about support and resistance, it's an area, not an exact number. So I'm going to kind of put 114, okay? Now, do you do it off a dollar amount? Do you do it off a percent? Typically, if we said 115, we see resistance, usually shed 50 cents a dollar off that and just try to put a target. That way, if it doesn't go all the way up to 115, we still try to have a greater chance to get out. We're going to go data GTC, good till canceled, which is 180 days that it's valid for. And then when we talk about the stop, right? If we zoom in on this right-hand side, what you're now going to notice is that 10-period moving average, the whole moving average, a weighted moving average, the price has just kind of been sitting all over that, okay? And if I look at this, if I kind of went down just a little bit and said, look, some of the recent lows were right around $100.54. Well, if I did that, $100.54, where my pencil is, less 2%, it's going to give us right around 98.53 if we rounded up a tenth of a penny. 98.53, and I'm going to go ahead and put it right here. Now, I'm going to go ahead and bring up data GTC, and what I'm going to do is, just for time's sake, I'm going to leave it 100 shares. Now, if you had it 100 shares, it's $104 stock price, $10,000, $10,400 to be exact. And so we're going to try to see if ConocoPhillips can't maybe move up in line more with what we're seeing on Chevron. Okay, so that's going to be trade example number one. Jeffrey, any questions with that or comments?
Yeah, one of the questions that I get from clients when I'm working with them on setting up trade plans and talking about exit strategies and entries as well, I noticed we're now about 2 days that we've come above that 102 level. Any thoughts to the audience, James, on should somebody consider waiting for a third day or a fourth day, getting in early, missing the movement if you wait too long? Just maybe providing some color to that idea.
Yeah. So the way I define breakout is we want
Hmm.
the open above the line and the close above the line. Okay. In
Gotcha.
other words, a green candle. The second part of that is you want the closing price higher than the open, meaning it just didn't pop and fade. Like, in other words, if you look at the candle from Friday, it gapped up above, but by the end of the day, it was red. Red candle actually just means you close lower than where you open. That would not meet breakout criteria. Now, I don't have a class at the end of the day, okay, with Jeffrey. And so what you're going to notice is we're going to kind of make an assumption that today's candle closes here. Now, if we close here, we're closing above the open. We want to see that it opens and it doesn't just rally, gaps up and fades, but it gaps up and rallies, meaning the closing price was higher than the open. In other words, other people saw the gap, bought it, and pushed it up. Now, usually, so this is for if you're trading a breakout, okay? Now, by the way, one of the things that can help many investors, there's a script that we use. So I do not want you to think that, my gosh, I mean, how am I going to be able to, let's say, track a lot of these breakouts? There is a script. So there's two ways you could see this, okay? I have a script here that's called a 20DH, and that's a 20-day high. That is one way that you could actually see a breakout, okay? Now, the reason why I bring this up is, Jeffrey, if someone says, I am trading the breakout day, well, if we close here, today could be viewed a breakout day if it meets that definition. That's if we hold here, okay? Now, what you're going to notice is if we see, let's say, something that is that's meeting the breakout criteria, we should see in ConocoPhillips, if it's hitting a 20-day high, that should be a green background, like we're seeing with that. You're also going to see that that's one way you could see a breakout, whether it's a 20-day high, 1 month high, 55-day high would be like a 2.5 month high. But the big thing is also with that you can also see is this breakout script here. Let me kind of slide this over so we can kind of give it a little bit more column width. So this right here, breakout or breakdown on ConocoPhillips, okay? It says today BO. Now that's not bad odor. That's today breakout, okay? Now, if we went to the charts and said, well, why is this not showing a 20-day high? Why is it not? Oh, and we're talking about just pennies. It goes back because Friday's high was 104.44. Today's current price, 104.14. We're 30 cents shy of that high from Friday. So if we go up above Friday's high, we won't only see today BO, but we're also going to see in this case that 20DH should also be green as well, okay? So now, by the way, if you said, I don't have that, and that would be a valuable tool, then you're a sharp person. It is a valuable tool because we're trying to use tools so that way we don't have to manually just look at each one ourselves. So that's going to be the breakdown. Now, the difference here, Jeffrey, kind of also with some color of your question is, if you said, hey, the timing of it, this all says testing yesterday breakdown, BD. So why is it red? Well, because it broke down. Why does it say testing yesterday's breakdown? Well, this is meaning that it's coming back up to where it broke down from. So first off, the red color tells you caution, okay? And it's testing. So it's kind of reverting back to where it broke down from. So Jeffrey, I just want to kind of give some tools with the question you had, but also if it's a breakout, it's a breakout. If someone says, hey, I want to give it 1 or 2 days to see what it does, it's up to them, right? Maybe they're trying to trade a bounce after it broke out. The breakout is the first sign of the breakout. If you said, look, I want to wait for the bounce, maybe 1 or 2 days after the fact, and then try to play the bounce, that's fine. But that's kind of like the second wave. But if you trade the breakout, that's the first, the bounce is the second, okay? And then after that, it's just like, hey, there's been some chances here to try to get in if you were really serious in trying to get in. Jeffrey, does that answer your question?
It does. Really good. I got a viewer out there too that's asking about point and figure charts and if they're being utilized. I can't talk about my strategy personally, but I do have 2 former market makers. There's 14 of us across the country that are on my team. And they are incorporating point and figure moving averages as market makers, or when they were in the market maker space. You'll also notice too that a lot of institutional traders tend to look at point and figure charts. So if you're looking to get into that and you want to learn more about that, check that out inside of the Learn Center on Schwab.com. I think we've got a couple of articles out there, or check back into this show. Keep asking questions, but wanted to address that real quick, James.
Yeah, sure. Thank you. So we're out of our time here today, Jeffrey. This is the worst part of the class.
I know.
Is how quickly it goes. Now, in the chat, there's a survey. We would appreciate it if you fill that out. It's just a quick 2 questions about today's session. So we talked about kind of some of the things on a high level that we actually saw that were kind of potential interest in terms of from an educational standpoint. Keep an eye on those. Keep an eye also on what color the moving averages are and what that's telling you about trend and momentum. Now, quick reminder that coming up right after this, you're going to see that when we look at the 13th, we have Jeff's World with Jeffrey Kleintop coming up at 11:30 a.m. Eastern. Trading a smaller account, we have Michael Fairborn, and I'll be back on Trading with Technical Indicators. Jeffrey, we sure appreciate you being here this morning. It's always a pleasure talking to Jeffrey Kleintop from Phoenix, Arizona. Now, a quick reminder as we wrap it up here, remember with what we discussed, it was done for example, illustrative purposes only. Remember that all investing involves risk, and your first job is not to potentially try to gain, it's to control risk and be careful in terms of position sizing. This has been the Trader Talks in Today's Market for January 13th. Wish you a great day, and we'll see you in a bit. Stay tuned for Jeffrey Kleintop coming up shortly. Take care. Bye-bye.